So late January 2026, what a time. After this just spectacular gravity-defying rally, the precious metals market didn't just hit the brakes, it slammed on them and went into a terrifying reverse. What we saw next was one of the most brutal and rapid resets in recent memory. So let's unpack exactly what happened and why. I mean, just try to imagine watching something you own plummet by nearly a third. And we're not talking over a month or even a week. This was in a single, gut-wrenching session. That was the reality for silver investors as the whole market went into an absolute freefall. A whole month of these incredible gains just gone, wiped out in a matter of hours. And the scale of this thing, it was just staggering. Gold, which had just touched a record high near $5,600 an ounce, shed almost $900 in a few days. Silver, it collapsed from its peak of $121 all the way down to the mid-80s. The entire euphoric January rally was just erased, gone. Investors were just stunned. It was a brutal, sudden reset. So what on earth caused it? And maybe more importantly, what comes next? We're going to unpack the perfect storm of factors behind the crash, and then we'll look ahead to see where gold and silver might be headed. Okay, first things first, we have to understand the setup for this meltdown. You know, a crash like this doesn't just happen in a vacuum. It was the explosive and you could almost say inevitable conclusion to a rally that had gone completely vertical. And what's really interesting here is just how many warning signs were flashing bright red before the crash. I mean, the market was screaming danger. Silver was trading an astonishing 137% above its long-term average price. And the relative strength index, you can think of it like a market thermometer, it was just scorching hot. See, anything over 70 is considered overbought. Gold was in the mid-80s and silver was way up in the 90s. These weren't just bullish signs, these were signs of extreme, totally unsustainable speculation. So, with the market wound this tight, what finally pushed it over the edge? Well, it wasn't just one thing. It was a bunch of things hitting all at once. It was a perfect storm of catalysts that triggered the collapse. The first big catalyst came from the U.S. Federal Reserve. And you get this, we need to understand the term hawkish. When a central bank is hawkish, it means they're laser-focused on fighting inflation, and that usually means keeping interest rates high. And that's bad news for gold and silver. I mean, why would you hold a metal that pays you nothing when you can get a safe and pretty attractive interest payment from a government bond? And that is exactly what happened. The Fed held rates firm, and then some stubborn inflation data came out still around 3%, which gave them no reason to even hint at rate cuts. This sent the US dollar soaring, and since metals are priced in dollars, a stronger dollar automatically makes them more expensive for everyone outside the US. That just crushes demand. At the exact same time, some of the geopolitical fears that had fueled that safe haven rally started to fade. The speculative fuel was just being drained from the tank fast. This quote from a market strategist perfectly captures the next piece of the puzzle. What's a crowded positioning unwind? Well, it basically means nearly everyone was on the same side of the boat. You had hedge funds, futures traders, retail investors, almost all of them were betting heavily that prices would just keep going up. And when a trade gets that crowded, it becomes incredibly fragile. And here's how that fragility turned into a complete collapse. First, prices just stalled for a moment, but that little pause was enough to trip the wire for automated selling programs. As their selling pushed prices lower, it triggered margin calls. That's your broker calling, demanding more cash, like right now. If you can't pay up, they forcibly sell your positions, which, you guessed it, pushes prices down even more, triggering more automated selling and more margin calls. It is a vicious, vicious feedback loop. And then came the final push, the knockout blow. The exchange itself, the CME Group, stepped in and abruptly raised margin requirements. That's kind of like your bank suddenly demanding a bigger down payment on your loan, effective immediately. This forced anyone trading with leverage to sell, and sell now. They were forced to liquidate into a falling market where there were hardly any buyers, especially with China on holiday for the Lunar New Year. The snowball was now an avalanche. So, after that storm, where do things stand? Well, the market has entered a brand new phase, the volatile aftermath. Now it's all about trying to navigate the very choppy waters left behind by this massive reset. And you can really see that uncertainty right here in the near-term forecast for silver. Analysts are looking at a huge potential trading range, swinging anywhere between $70 and $100. That's a massive $30 window, which just goes to show you how much conflict there is between the shell-shocked sellers and the bargain-hunting buyers. Amidst all that chaos, analysts are watching for key support levels to see if they hold. You can think of these as potential floors for the market, right? These are the price zones where those bargain hunting buyers are expected to step back in, potentially stopping the fall and creating a new base for the price to stabilize. You could say these are the new lines in the sand for the market. Okay, so let's zoom out for a second. The short-term picture is, well, it's clearly a mess. But what about the long game? That brings us to the long-term bull case. Because despite this spectacular crash, most analysts argue that the fundamental reasons to own gold and silver, they haven't gone away at all. And you can see that conviction right here. I mean, just look at these forecasts from major institutions for later in 2026. A Reuters survey sees gold around $6,000. Goldman Sachs is at $5,400. Metals Focus even sees potential for tops above $7,000. So what they're saying is they see the crash not as the end of the bull market, but as a violent and maybe even necessary correction within it. So why are they so bullish? Well, it all comes down to these powerful underlying drivers that are still very much in play. You've got central banks around the world that continue to be massive buyers, trying to diversify away from the dollar. Global debt levels just keep rising, which makes hard assets more and more attractive. And for silver specifically, its industrial demand for things like solar panels and electric vehicles is structural and it's growing. These forces are much bigger and much longer lasting than a short-term speculative washout. So what is the best way to summarize what happened back in late January? I think one analyst absolutely nailed it with this quote. After a move straight up that seemed to defy all logic, the market just discovered gravity. It was a brutal, but maybe, just maybe, an inevitable return to Earth. Which really leaves us with the most important question of all, doesn't it? Was this crash a fatal fall, signaling the end of the great precious metals bull run? Or was it simply a violent but necessary reset, a clearing of the decks that shakes out all the speculators and prepares the market for its next major climb? The answer to that question? Well, that's what's going to define the next chapter for gold and silver.